This video segment is a small part of what the market guys offer through their educational products and services. If you are interested in any of our trade alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.
Hello, everyone, and welcome to the Open House Q&A session. I'm AJ Monty, and welcome again to especially our newest members of the mentor program. We have Constance and we have Rob on the line. Hopefully you both had your applications moving forward for your option trading. Things are getting really good, and I'm most likely going to be talking some options on tonight's call. I won't be focusing too much on that because there's a lot of folks that just trade equities. But first, before we get into any of the stock symbols, just hold back on those if you could. Just lay the groundwork for the newest attendees. This is an interactive session for those listening to the live broadcast right now. And so when I queue up for stock symbols, you could type in a stock symbol and we'll analyze those stocks one at a time on a first-come, first-served basis. And one other thing I want to mention is this is going to be an interesting week. It's shaping up to follow almost exactly as I forecasted last week. And this is the diamonds. It's the Dow Jones Industrial Average ETF, ticker symbol DIA. And you can see that, again, the market is almost following this forecast line. And obviously, the general market, the institutions, the banks, investors, they don't see this line. It's only our members that see that broadcast, that forecast line from the weekly market report. But I take all of the signals from this exact chart that you're looking at right now. And I don't really use any complicated formulas or oscillators. I do use the CCI and the Stochastics, and I don't want to overcrowd the charts in any way with too much information. I use the 20-period simple moving average, which is this blue line right here. And today, although it was a green candle and we closed slightly higher, you can see that the downtrend is still intact. We had a lower high and a lower low today. Now, here's what's telling me that we might see a little bit of a bounce midweek. And first is, notice the drop in the volume here. The drop in the volume is telling me that the sellers are starting to slow down a little bit. And that tells us that the pressure on the sell side is easing up. And you see that this is all happening right at the 20-period moving average. Now, a lot of times the 20-period moving average will act as a support level, of course, when the stock is trading above it. And it will act as a resistance level like we saw back here when the stock trades below it. So if, for instance, tomorrow we see a little bit of a bounce off of that 20-period moving average, and that obviously means that the buyers are coming in, this area up top is still going to hold as our resistance point because we're taking that from the highs drawn back here from July 16th. So all I did when I put this line in place for the weekly market report, I drew a horizontal line. It's called a flat line resistance from that high, and you can see that I connected it to the high of September 13th and projected out. Until we break out of that high, it will obviously be holding as resistance. Now, the other thing that we have to be very mindful of down here is that there's still open gaps below the market. So, even though we could bounce, I'm still thinking we could fill this gap on the downside for a couple of reasons. Obviously, the trade war with China has not been settled yet. That's number one. Number two, September and October are the most notorious months of the year, and it's where we get the most selling pressure throughout the year is September and October. As we come into the fourth quarter, and especially towards the end of the fourth quarter, we generally hear of another cycle, which is the year-end rally or the Santa Claus rally. Now, it's still too early to start to play that from the long side. So what I'm saying here is be very cautious of any long positions, at least until this gap down here fills. Okay? The other thing that you really want to pay close attention to are the stochastics, which this blue line represents the percent K, and the red line is a 3-period moving average of that, which is the percent D. The CCI is the most sensitive of the two oscillating indicators, and you can see that we're getting very close to an oversold condition here. When the CCI starts dropping below the green line, which is the minus 100 line, see all the way to the right there? The scale is, it has the mean, or the zero line is right there. You have plus 100, plus 200 on the upside, minus 100, minus 200 on the downside. When it starts dropping below minus 100, it's oversold by definition. Keep an eye on the CCI, because when that starts turning up, that could be our opportunity to get in on some new buy ideas. And you want to look at the individual stocks as well, not just the general markets. And so there's a lot to be keeping an eye out for, particularly the gap, the CCI, watch for volume. But I am keeping this line in place until the market proves me wrong. Now I'm going to hop from the diamonds to the VIX, okay? Now, in the weekly market report, I said, and I always do this, when the VIX gaps up or down, I always stake my reputation on the fact that the VIX will fill the gap one day, because that's true. The VIX is not a stock. The VIX does not trend, it oscillates. Now, back here, you might say, well, isn't that a trend? You know, when the VIX dropped from the highs back here in December to, you know, mid-April, May, that is considered a leg, not necessarily a trend per se. A trend is a longer-term price movement in one direction or the other. A shorter-term trend is called the leg, and this would be a down leg. You could see that we are starting to form a pivot point here on the VIX. And being that today's Monday, look what happened. Even though it's a red candle, we have a higher low, higher high after a bullish engulfing pattern formed on Friday. So I'm still going to wage that the VIX gap here will fill eventually. So if the VIX is bullish and we're expecting it to fill on the upside, then we could say that the spiders, which is the S&P 500, will most likely fill its gap on the downside. Now, it may not do it this week, but I think eventually it will. Again, when the VIX fills its gap, the S&P will most likely fill this gap, and there's a little bit of a gap down here as well. So, you know, like I said before, we have a lot going on. The big test is going to be whether or not the 20-period moving average holds as a support level. If not, you got to keep that as a risk point and manage any long positions accordingly. I would suggest that you keep stops in place and make sure that you are okay to not trade too big on one side or the other. Now I'm looking. Jim put a note in there that the poor sound quality. If anyone else is hearing bad speaker or sound quality, please let me know. I don't know if there's much I can do on my end here other than sign off, sign on again, but maybe I could lower the volume or something. I don't know, but tell me, does that sound okay? Sound not a problem? Thanks, Gene. Sounds good here. Thank you, John. Okay, John, hopefully you got my note about BA. Maybe we could talk tomorrow about that. I sent that to you in the text form. All right, John's another mentor, so he has access to me via text messaging, and that's what I was talking about there. Okay, so SPY, that's what my forecast is. Now, let's look at the Russell 2000, which is a more broad-based index. And again, it's as if the market is just following my line precisely. This was a 2-week forecast that I put in. This was last week's forecast. It followed it perfectly. The Russell 2000 is looking as the other markets did with a lower high and a lower low today. That spinning top is usually what you see at a pivot point. So again, we might see a little bit of a tiny bounce midweek before we go lower. But keep an eye on the stochastics and the CCI as well. All right, and finally the Qs. And I'm gonna talk about one more market before we go into individual stock symbols, because I'm sure there's a few people that are going to want to know about the silver market and the gold market. So I'm going to talk about that. Okay, so the Qs are very close to my forecast already. So if we get a lower low tomorrow, we're very, very close to filling the gap completely, which is this support line that I drew down here. And then we could start to see the Qs possibly bounce. I think out of the markets that I've mentioned so far, the Qs will probably be the first ones, the first market to bounce. Tech sector is loaded with volatility, and we'll have to see. All right, thank you, Constance. So it seems as though the folks in Canada are not getting the greatest quality sound. I just have a new internet connection established today, so there's a new I have a new location here that I'm broadcasting from, so maybe that's it. I'll have to check that out. All right, so let's go to silver, because I've had, for the longest time, I've had a long position in silver. It's SLV, not SIL. And today, look at this. Silver gapped up 71 cents, and there is a small gap all the way up here, very minor gap up there around 18. Now, for those who are long silver, and a lot of our subscribers are, and we have covered calls against that, silver is going to have heavy resistance up there around 18. A lot of the analysts are already saying that silver and gold both are overbought. There are gaps still below the market all the way down here, right around 14 and a quarter, 14 and a half. There's still open gaps down here. So if you are long silver, I would be seriously considering taking profits at least on half the position, and then on any negative or bearish pattern, I would say get out of the rest of that position until some of these gaps start to fill. Right? You could see the gap fill rules work pretty well. 80% of the time gaps fill, 80% of the time after they fill, prices reverse. Here's a gap, here's a gap. What happened after this gap filled? Well, it reversed, didn't it? It went the other way. Now that silver is caught between gaps. So I wouldn't be surprised if it fills the gap to the upside, then comes right back down and fills this gap here. So if you're long silver, again, watch to take your profits. If you're looking for an opportunity to trade silver, gap trading strategies work really well for the precious metals markets. I've been trading silver especially since 1982. It's something that I know very, very well. Very little fundamentals that go on other than inventories. Some people look at the currency markets, but you can't always depend on that. My guess is, and there's not that much news out on silver actually, I'm guessing that maybe the Chinese could be loading up on silver in an offset against this trade war. Maybe they're going to try to attack the dollar. I don't know. Again, this is pure speculation. But if the Chinese are manipulating the silver market, then watch out. I would expect higher volatility down the road on that. So be careful. Now, with silver, GLD is the gold market. This one did not gap up like silver did, but you could still see that there's upward momentum. Gold is probably just a hair away. Right here, it's a hair away from being overbought on the technical indicators. And GLD, let me erase all these lines. There's still gaps above the market down and below the market. But I want to point to your attention to the gap above the market right here. There we go. So once that gap fills, I would expect prices to drop. And then you have gaps down here below the market. You have another big gap down here below the market. and you have gaps down here below the market. So there's many more gaps below the market than over the market. And again, that's why I'm very, very cautious of the precious metals right now. I don't feel very good about holding long positions. And what I'm doing, I'm just giving you some insight of what I'm doing personally. I'm trading Ford. What I did is I took a lot of my silver position off, and I bought into Ford today. I bought a little bit I bought it close to the highs today, right around 922. I think I bought a penny off the high. I'm okay that it sold off later in the day, because if you look, Ford is now oversold on the CCI. It's oversold on the Stochastics. And this is one of those stocks where you have a super low PE ratio. Even Schwab has this rated at the higher levels. I think they have it rated as an A or a B. They pay a very big percentage in dividend. I think it's like 6% dividend. So we're getting close to the record date. So I wouldn't be surprised if you start to see a rally in Ford. I'm giving you a freebie here, folks. I think that what will happen is investors who are looking for a safe haven are going to start to accumulate Ford in an effort to get in on it before the record date so they can capture the 6-cent dividend, or 15-cent dividend. And so that could be a play right up until filling the gap right there around 10 and a quarter. So if you get a dollar return on a $9.16 stock, that's a tremendous ROI. And what I'm thinking about is I'm still going to be a buyer all the way down to the support level. If Ford gets down to 8.5, I'm a scaled down buyer on this one, because if I get to accumulate it and get the dividend, then I can lower my cost basis by 15 cents pretty quickly. There's not enough premium in the options really at this point for me to sell puts or to do covered calls. And so the stock in and of itself is really priced at what an option would cost. So I'm very bullish on Ford. I'm bullish on trading Ford, and I like this gap. I'm going to be bullish all the way up until that gap fills, and then I'm probably going to exit my entire position in Ford and just continue to trade it in the trading range. There's a really nice trading range that the stock is in. I'll show you that as soon as I go to the weekly chart here. Let me do that. You can see that there's a roll reversal all the way up here, very close to where that gap fill price is. You see this? This roll reversal is former support broken, is turned into resistance. And so you got this really nice trading range between roughly 9 and 10 and a quarter. So I'm going to be playing in and out of this mainly from the long side. Again, because if I get caught long, and I'm accumulating on the long side, and then I get the dividend, then again, that's just a bonus. Okay, so took me 18 minutes to get through all that. Hopefully you're okay. And now we're going to go right to where we're talking about individual stocks. So if you typed in a stock symbol already, please type it in again, because it's already washed off my board here. Let's see, Gene has one. What's that one? Oh, Gina, yours is washed off. If you could retype that, that would be, I'd appreciate. Ron is looking at WEN. What's a good entry point for an investor? Okay, WEN. Let me see, get that in there. WEN. Hold on. There we go. All right, so here's Wendy's. This is a weekly chart. And you can see, obviously, that Wendy's is in an upward sloping trend for the past 3 years. I'm going to take one step back, and you're going to see an accelerated trend right here. You see, I'm going to do something I haven't done in a long time. I'm going to draw fan lines, okay? And this is going to help you out, Ron, with regard to an entry point. A fan line is when you calculate the long-term trend by picking 2 points. Then what you do is you take the last point in the trend line that you just drew, and you draw another accelerated trend connecting some of those lows. And you continue to do this, taking the last low that was touched and projecting out to accelerate the angle of the trend. Now here, it's 3 fan lines already. I'm going to do 4 fan lines. There's 4 fan lines, and then I'm going to switch to the daily chart where I will draw another fan line. Actually, here we go. Ready? This is what we're looking at. Now, here's the thing, Ron. Backing up just a little bit, all right? Oh, I got to back up, not go in. All right, I got to go to the weekly chart again to show you how many fan lines. Oh, 1, 2, 3, 4. We have 5 fan. Oh, excuse me. Hold on. We have more than that. We have 1, 2, 3, 4, 5. We have 6 fan lines on the chart. Normally, when you have 3, that means the trend is accelerated to the point where we would expect a pullback. Rarely do I see 6 fan lines. Now, this is important that you get this, Ron, because if the stock goes up to fill that gap, right, and it's not that much further before this gap fills. That low right there is 21.91. So I'm only expecting maybe $1.50 more on the upside before that gap fills. Unfortunately, if you look down at the CCI is already starting to hinge lower. So what you have to watch out for in the world of fan lines, when the most recent or most extreme fan line is broken, you will expect, or we will usually see a drop to the next fan line in the sequence. Now, here's where it gets a little bit complicated, Ron. There's still a gap below the market down here, all the way down to 1831. So if this second fan line from the top breaks, it will most likely drop to this fan line. So for an investor, you got to be careful because a trader might trade it up to $1.50 higher till the gap fills and then they're out. But an investor is most likely going to want to start to accumulate this at 18.5. You might say, oh boy, I got to let that drop, 10%. Yeah, I mean, it would be great if it drops $2 before you buy it. But as an investor, I wouldn't be touching this one until at least this gap fills. All right, so you have a mixed batch here. The CCI, which is the most sensitive oscillator out of the two, is already hinting that the downward pressure is starting to show up. So I would think that tomorrow you're going to see a drop below this fan line here, and it's going to start moving down to the second fan line in the sequence. And I say second, even though that's the 5th fan line. The second fan line from the top is what I'm referring to there. So hopefully it helped you out, Ron, all right? Now, John, we just got finished talking about the GLD, but I'll look at gold for you because you're looking at Barrick Gold now. I don't know if I would short Barrick Gold just yet, but if you are thinking about Barrick Gold as a short, I would say getting close. The CCI is not overbought yet. It's getting close. So we're seeing the signals that the buyers are starting to slow down for a couple of things. We see a very small spinning top, almost a doji. We see that the stochastics are already overbought, but they're not hinging lower yet. We do see the drop in volume, which is bearish. And as soon as we start to see the CCI moving lower, that's when I would consider starting the short GLD, GOLD, or Barrick Gold. That's when I would consider shorting it because this would be your resistance high up there around 20. Now, again, I'm spending a little time on this for John here because if you decide to short it, let's say it goes up to 19 or down to 18.5 and starts pivoting, you cannot really hold that short above that high because if it breaks out over 20, any short seller is going to get caught in a short squeeze, and that could be painful. So if you do decide to short it, I wouldn't go crazy and short a whole bunch of it, but I would put a buy stop up there around $20 and see how that works out for you. Okay, Philip is asking about Lockheed Martin, which is LM. Let me go to LM on there. They're right here in Florida. Wait, LM. Hold on. Wait, Lockheed Martin is LM. Isn't it three? LMT, right. Okay, LMT. All right. Now, LMT is, let's see, you see no position. Do you recommend the stock or call options? Well, this is another one, Philip, where you got to go back and look at the weekly chart, the monthly charts rather. Go back and look at this. And you'll see that we have fan line number one right here. This was a nice steady trend right there. So this fan line number one, accelerated fan two, more accelerated fan three right here. You have four right here. And if I went to a daily chart, you'll see I could probably draw another fan line. Let's see if we can do that. Yes, we can. And we have another fan line right here. So this right now also looks a little overextended. So be really careful when you're trying to buy in the month of September or October, like I said before. The daily charts are telling us sell it because the stochastics are crossing today. We see a drop in volume as the stock was going up, so that is telling us the buyers are running out of steam. There's a gap below the market, and it looks as though that if we have a lower day tomorrow, it's going to break out below the 20-period moving average. So if it were me personally, I'd be just keeping it on my watch list. I wouldn't be rushing into this one, especially, it's a $386 stock. Now, with that said, let me just throw something in here which is more geopolitical than anything. We obviously have this ongoing, never-ending, very dramatic, U.S.-China trade war, right? It seems like the markets last week dropped because one of the representatives canceled their meeting, right, to the Midwest. And then today they said it had nothing, it was not related to the trade negotiations. So then if that's the case, it dropped on that news Friday, then why didn't we rally really big when they came out and said it had nothing to do with the trade negotiations? So this is how insane the news and the volatility and the emotions are with regard to being a charged market. It's crazy. So you got to be really careful. Now let's play this out for a second. What would happen, right? What would happen if all of a sudden they announced we have come to an agreement? Personally, I think the markets could rally $1,000. And then guess what? After it rallies 1,000 points, I think it could drop 2,000 points. Why? Because there's so many people anticipating that eventually the markets are going to rally on the settlement that when it finally happens, they're going to say, okay, well, what else can possibly happen that'll charge the markets to new record highs? And then they're going to say, oh, nothing. And then they're going to sell the news. There's an old saying, buy the rumor, sell the news. Well, once the news is released that the trade war is settled, like I said, I believe we're going to see a significant rally. But I'm not going to be buying into that rally. I'll tell you right now, I'm going to be looking for an exit strategy on many different positions at that point, and I may even short the market when they finally come to some kind of an agreement. Now, that's what I feel the markets will do. Now, politically, you have to understand that this might just be dragging on into 2020, which happens to be the election year, and Donald Trump is really banking a lot on this deal as part of his reelection campaign, right, for a second-term president. And he's banking on strong stock market, and he's banking on a strong job market, and he's banking on a strong economy. Now, I'm not one of the president's advisors, but I think he's really stacking the deck into a pretty risky corner because if any one of those things fails, guess what? His opponents are going to pounce on that. And that's only going to drive the markets lower. So we have to be, as traders and investors, we have to be extremely cautious right now. And we should also be very mindful of the technical signals. And if you're one who's just joining the market, guys, and participating in an open house for the first time, every decision that I make is first gathered. The evidence is gathered from the technical charts first. Then I go and I start looking at the fundamentals, like on Ford, or I'll look at the gold markets, or I'll look at Freeport-McMoRan. You know, Freeport-McMoRan, I was looking at the gold silver index, and which the XAU, which tracks the mining companies, and the XAU has been storming higher, while Freeport-McMoRan has been just kind of staying at the lower levels. So, you know, one of the other is going to start to give, and that's why we have to be very, very cautious of our downside risk and make sure we're not getting too emotionally tied into the markets. Gene, I already went over SLV. If you have another question on that, just let me know. I'm going right to Mike. He's looking at Square, which is ticker symbol SQ. If we look at Square Inc., Mike, I just see you put a symbol in there. If you have any intentions of what you want to do with that, please let me know. I'd like to get your thoughts on whether or not you're taking a position, because if you are, I'll tell you where to put your stops in. But here's one where the stochastics did not show overbought or oversold, but the K line is crossing below the D. So that would be considered negative. The CCI is moving lower. That would be a negative. The stock is on a very minor support level right now, so any move lower tomorrow could be a breakout to the downside. And again, this is one you got to be really careful, because there's a gap above the market, but it doesn't look like it's making any kind of a move to fill the gap. This is more or less what we see up here on the weekly chart is very, very close to what we would call a complex head and shoulder pattern. So if it starts breaking down or breaking out below that neckline, which is what we're looking at right here, this one could go a lot lower. And I'm not saying just a little lower. I'm emphasizing on the a lot part. This one could go a lot lower. So you got to be really careful of that one. This could be a good option candidate for those that want to trade strangles or straddles. You know, that could be a good candidate. But be careful of that one on the long side. Jim is looking at TER. Let's take a look at that one. All right. Teradyne is on the weekly chart looking overextended. You can see here that we have an upward trading channel, right? If I do this, you'll see two parallel lines moving in an upward direction like that. That's a trading channel. The weekly charts are showing so far a spinning top and a stale green light. We have 1, 2, 3, 4, 5 weeks in a row where this one has been going higher. And again, it's only Monday, so that candle really means very little, and the volume means very little. But what really carries a lot of weight on this one, Jim, is that the stochastics are extremely overbought right there. And that is, the stochastics are registering around 94. Anything over 80 is overbought. The CCI is starting to lay flat, and as soon as that starts going down and crosses below the plus 100, that's going to give a sell signal. So you got to be really careful of that one. I'm looking at the weekly chart. Now let's go to the daily chart. Daily charts are confirming pretty much what I said on the weekly, except the stochastics is already crossing with a sell signal up here. So any buy idea in my book is going to be out until the gap down here at least fills. There's a gap right around 47.70. Once that gap fills, I would then look for a possible bounce pivot point, and then I would take a very, very light long position with a stop right below the gap fill support level. And that's how I would play that one. All right. So, all right, John, we already got to yours with shorting GLD and SLV. Okay, yeah, Gene, yes, looking, I would close your $14 leap, Gene. Yeah, definitely, because it does look a little bearish on the gap side there. All right, now let's look at, hey, Jeff. Hope Jeff is almost a neighbor of mine. He's down the road here in Florida. And he said he today bought the 105 OKTA calls for November. Let's see. Let's look at that one. OKTA. You bought the calls, the 105 calls. So you bought at the money calls. Yeah, Jeff, you take a lot more risk in the option markets than I do. Number one, I don't like buying front month options because they have too much time erosion, and I certainly don't like to buy at the money options because they have the most time value that would be exposed to that time erosion. However, the good news for you is that there's a small gap here. I don't know if you could see this, that recently filled right there. So now there's an 80% chance that the stock will reverse and go up. Today, the stock was down $1, but you still have a buy signal in force on the stochastics, and the CCI is still moving up, but you got to be really, really careful. Look how I zoom in on this CCI. See how it's starting to hinge there a little bit, to go flat? Don't know where you have a stop on this, but I can tell you that my exit point would be anywhere close to the 20-period moving average. So if I bought front month at the money calls on this and the stock starts moving up anywhere near 115, I'd be getting out and taking the profits, and I would be skipping out the door and happy to take the profits on that one. So be careful. Any long position, kind of risky, especially with the drop in volume today. Today's volume is half the volume what it was on Friday, so there is very little upward momentum sustaining in OKTA. All right, Efren, welcome. SNE top and bottom line. Okay, so let's see. SNE, I don't know what you mean by top and bottom line, but here's resistance right there. And this is one that, talk about a gap candidate. This one has a history of gapping, right? Because it's an ADR, right? Obviously, it's a Japanese stock. It's an ADR, trades as an American depository receipt. When you have a stock like this that is gapping almost every other day, you cannot really use the gap fill rules as they would apply to any U.S.-based company, because this one, there's just so many gaps. There's nothing that's really drawing my attention to a target. However, with that said, I can tell you that there is a role reversal. Flat line support resistance lines hold very well in this one. So this former resistance right here from back in July was broken. This is now a support level. The stochastics is starting to hinge higher, which is positive, all right? Now, one thing about stochastics is that, in a nutshell, I'm not going to give you the whole formula, but basically the stochastic measures a 14-day period, right? And then it looks at the closing price. So for the stochastics, the emphasis is placed on the closing price of the stock and how it relates relative to the high of the period, not the high of the previous day, but how it relates to the high of the 14-day period. And so if the stock closes on the high or close to the high like it did today, the K line is going to start right here and it'll start moving higher. Now, I'm surprised to see that the CCI has not moved higher. Rarely do you see the stochastic start to move before the CCI, but this has happened. So if you're deciding to buy the stock, be really careful because your stop would have to be right below this level, right below 57. The 20-period moving average could very well act as a support level, so you might see a pivot. But the way this one is working, I don't think it's going to break through that resistance point, so you got to be careful. And the main reason I say that is because the volume is slowly drifting off. You see that? So we don't see big volume or we don't see a lot of breadth in the market. You ever hear market breadth. You ever hear the analysts talk about the market breadth? Well, talk about volume and the force behind the move. Sony does not have a whole lot of volume supporting the move up or down. So these small spinning tops and dojis that you see right here are signs of indecision. And so I don't see any real commitment on the other side. Efren, I'm telling you, there are so many other stocks that you could be trading that give more convincing signals. I would have you consider at least looking at some of those, okay, instead of one that's so choppy. Okay, John is asking about AMD. I believe that's Advanced Micro. Let's see, am I right? Advanced Micro Devices, yes, it is. Thinking about buying. CCI is going up. Bollinger Bands consolidating. I'm not looking at the Bollinger Bands so much. And I imagine when you mean Bollinger Bands are consolidating, does that mean that is that your term for when they're pinching? If the Bollinger Bands are pinching, that means the volatility is slowing, and we could expect a possible breakout. Today almost had a bullish engulfing pattern. All right, so you could see that the stock had stale red light, four red candles in a row. Today we had a green candle on lower volume, which means the sellers, see, the drop in volume means the sellers are slowing down. The CCI is going up, stochastics are going up. This one is looking much more positive than negative. So if you're thinking about buying it, I would consider buying it, but you have to keep a stop very, very close below these lows. So if you buy it at 30.64, you're going to want to put your stop probably $1 lower than your purchase price to give the stock enough room to breathe on that one. Okay. All right. So Mike, you just said that you had that at 63. All right. Got it. All right. Rob is long DWT. Take a look at that one. Oh, I have to put in D, not a Q. DWT. Come on now, get the symbols right. DWT. 1, 2, 3. Long it. All right. Now, Rob, this one, the CCI just crossed over the plus 100 for a buy signal. That's good. Stochastics, I don't know how to read that one, actually. It looks like it's right on the line. You might have a cross, you might not have a cross, but stochastics are really showing neutral. And you got these spinning tops. You got 4 spinning tops in a row. What I would say is the main thing that you have going for this is that it's got a gap above the market up there around 640. So I would be very careful with this one because you can a lot of times get trapped into thinking, oh, it's a cheap stock, so let me hold it. Well, the stock has a higher margin requirement when it's trading below $5. And the brokers will release that margin requirement once it starts trading over 5, which is going to be right around here. So what I'm saying is once it gets over 5, it becomes more bullish because the buyers who own it or the investors who own it and those who trade it will have more buying power to buy more of it over 5. So once it starts getting over 5, then I would set the target up here for around $6.30, at which time I would get out on the gap fill point. All right. All right, Lewis, what do you have there? EHTH. Let's take a look at that. EHTH. I got that right? Yeah, I do. eHealth Inc. Buy question mark. Well, this is an interesting one because the momentum indicators are still showing higher. So stochastics is hinging up. The CCI is hinging up. That's bullish. The volume, you didn't get a big volume day today. However, this is considered a harami. When you have a green candle that falls within the body of the previous red candle, that is as bullish as a bullish engulfing pattern. So I would go with a buy on that one. However, I would keep my stop pretty tight because if this fails to get over the 20-period moving average tomorrow, and tomorrow would be your telltale day, because if it doesn't break out of the 20-period moving average tomorrow, then that means that the 20-period moving average is holding as resistance and it could drop back down to 70. All right? So you want tomorrow, what you want to see is a breakout over the 20-period moving average on higher volume. That's going to be the key for you. So if you could hold out, and I wouldn't do it on the opening, but if you could hold out tomorrow towards the close and you see that the stock is going to close over the 20-period moving average and it looks like the volume is going to stay higher, then I would get in. I would get in the last half hour of the day if it looks strong. All right, and then I would keep an eye on the CCI, and I would keep an eye on this level because that's a resistance area that once broken will become a support level. So once it starts going up, and I think it really could, I would then trail my stop up to a level just below support, so right around 84.5, and then keep trailing your stop as the stock continues to go higher. Okay. All right. You're welcome, Jeff. Your sentiments, my sentiments exactly is what Jeff said. Okay. We still have stock symbols coming in. John Sweeney. Hey, John. J&J. Looking at J&J. John, you in town or you still out in your camper? You trading from somewhere out west, maybe in the mountains? I don't know. All right. So J&J is showing very, very strong signs right now, even though we have mixed signals on the oscillators down here. And here's why. The CCI is hinging lower. The stochastics is still going higher. This is where you start to pay very close attention to price patterns. The 20-period moving average is starting to turn up. Let me zoom in here to show you what I'm talking about. See how the 20-period moving average is starting to move up? That means it's going to act as a support level. You'll notice that in the past, when the 20-period moving average starts going up on good, strong green candles, we start to see it really accelerate higher. However, this area right here is known as a cup and handle. I don't know if you could see it. I could have drew a straight line there, but it's more or less a complex cup and handle. Here's the cup, and the brim of the cup is right here. Here is the handle. If you get any positive day tomorrow, any positive day over that brim, some call it the rim, any positive trade over that will most likely result in a breakout. So this is one that could wind up doing very, very well. Johnson & Johnson, they make money hand over fist. It's crazy how much money the pharmaceutical companies make. Even with some of the side effects that some of these drugs have and the lawsuits that believe me, they put more money into legal teams than they do advertisement. So I think that to play this one, you got to be very technical on this. If you want to trade options on this, now, John, I don't know if you're open to trading options, but this is a good one where if you want to get long it and you want to get paid while you wait, let's see, why isn't my option? Yeah. What I would do is I would maybe sell the 129 puts and buy the 125 puts. So I would or maybe do the 130 puts and buy the 126 puts. So what you could do is a $4 bull credit put spread that would give you a 25% return. And this is one that I was looking at doing for the option trades. It's still too early. But that one looks like a good candidate where you sell the 129 puts, you buy the 125 puts, and you do it for $1 credit. And then the most you can lose is $3. The most you can make is 25% on your investment. Again, I don't know if that helps you if you trade options, but again, it's looking more bullish than bearish. And hopefully that helped you out. All right, we have still 12 minutes. It's a lot of time to get moving on here. And yeah, Constance, I'm not getting too many people complaining about the sound, but I imagine that if you listen to the recording, you should have a good track on that, a good soundtrack on that one. All right, let's see. We have time for maybe 2 more stocks. If you want to type those in, go right ahead. Got a good crowd today, by the way. Thank you very much. Vlad is next in line with CVS. Vlad, if you have a position in that, type it in, or if you have an intention. CVS is actually starting to look a little weak, And here's what I'm talking about. You see the gap up here, obviously. Let me erase that and I'll redraw the gap. So you have the stock has an open gap above the market. So that gap fill point would be right around 69.5, okay? Now you have a red candle came in today, and you look at both of these oscillating indicators are going lower, all right? So it's telling us the momentum is lower, and the volume is not really slowing down all that much. It was a little bit, but if you get a negative day tomorrow, you got to be really careful because there's still gaps below the market down here as well, all right? My guess for CVS is that it's going to break down and break out below that 20-period moving average and probably start heading lower. So I would, instead of being an aggressive buyer, I'd be waiting on this one. Keep it on your watch list. Just watch and wait for a signal that's a little bit more convincing. Because if you wind up buying this one and it drops, I would hate to have you hold on, while we're experiencing the month of, October, like I said. If you could hold out till after October, as we get into November, December, looking for that year-end rally, I think this one could be a great candidate, but I think it's still a little bit too early to be able to get in on that one and feel comfortable about it. All right, so hopefully that helped you out, Vlad. Oh, okay, you had another note on there. What was that? Okay, to buy. You're looking to buy. Okay, yeah, I would hold off on that one and wait till you fill a gap or find the significant support level that it's bouncing off of. Hey, Kim, hopefully you're not a deer in the headlight tonight, all right? I'm going to look at NEE for you, all right? NEE right there, Nextera. This one is looking like a sell right off the bat. You have a resistance high on much, much lower volume. I'll just stack up all the sells. I don't see what your intention is on that. All right, Kim, maybe you could tell me if you think about buying it, selling it, what. But you have a resistance area right there at 225. I mean, this is got sell signals written all over it. The stock has been going up. You have a stale green light. Today's the first red spinning top, so that's bearish. You got the stochastics hinging lower. That's bearish. CCI is hinging lower and very close to a sell signal. That's bearish. You have the next role reversal support is going to be down here around 212, 213, okay? And my guess is that if I go to a weekly chart, you're going to see all kinds of overextended on the fan lines. And actually, I'm going to go a little bit further on the month chart. See, at first glance, you might think, well, this is an upward trend. Let's just keep buying it. Let me get rid of this. Okay, so ready? Fan line number one. I'll do this in quick succession. Fan line number two, going to the last point, connecting to that low, projecting out. Ready? Got to get those to touch. All right, go to the last point, project out to this one. Keep going. All right? We have another slight increase here in the momentum of that trend right there. We have another accelerate. So now we're going into 5 fan lines. We might even set a record with this one. Now we got to go to the weekly chart to continue. We got 5 already. All right? Here, you got 6 fan lines right here. We've got 7 fan lines right here. And we now have 8 fan lines. I do believe that is a record, Kim. 8 fan lines, there is no way I'm going to be long that stock. This actually becomes one of the next best short candidates for the option traders yet. In fact, thanks to Kim, I'm going to put this one on my watch list. Let's see, NEE. I'm keeping an eye on that one. That's on my watch list, Kim. So if you have any idea of shorting that or selling it out of the money credit call spread or buying a long in the money put, to possibly do a calendar spread. I know I'm talking option language, but Kim knows what I'm talking about. Kim, if you want to buy a leap, sell a way out of the money front month put, that would be a great one. And hopefully that'll help you out. I'm looking for Paul Farley. Is Paul on the line? Paul very rarely misses these. And one of the reasons is because I want to wish Paul a happy birthday tomorrow. He shares the same birthday as my older son, Greg, and I don't see Paul Farley on him. Just looking through here. Anyway, Paul, if you're listening to the recording, happy birthday, my friend. Paul is our oldest, or I should say the longest subscriber. He was one of our very first Oracle subscribers, one of our very first mentor students, and continues to follow us many years later. And again, happy birthday, Paul. All right, last stock. Let's take a look. That's Paul. Another Paul is looking at Cisco, CSCO. Paul, if you could tell me what your intentions are on this one. Cisco is looking more bearish than bullish. You got a gap below the market. Let's take a look here. The stochastics, it's kind of crazy, isn't it? You got a red candle here and a bullish engulfing pattern on Friday. It's mixed signals. When I see a stock that has so many different signals to the upside and downside, also known as mixed signals, I generally stay away from it, which is why I want to know if Paul has a position in this. Paul, if you have one, I'm just waiting because I know there's a little bit of a delay. If you don't have one, I'm just going to make comments on both sides of the market. You can see here that this is the weekly chart. And what's happening is you obviously have this trend line that we're working with here, and you have a recent higher high. I don't think this stock is going to have enough oomph, if you will, enough volume, enough upward momentum to break out that high. So what's going to happen most likely with a stock like Cisco is you have people who are long this stock. You know, you got to look at this, that if you think about it, anyone who bought this stock prior to September, anyone who bought the stock prior to September is now experiencing a profit in the stock. So that's called a heavy market. When you have almost all the investors, except for maybe the most recent ones that bought back here, the majority of the investors that are holding Cisco are in a profitable position. So when the stock starts dropping down below key support levels or trend lines, the market tends to turn on itself as the investors start to stop themselves out or take profits or manage risk, whatever the case may be. You got to be really careful with this, with a stock like Cisco, especially if it starts dropping below the 20-period moving average, which is going to be right around 48.53. Okay, so be really careful with that one. And again, Paul said you bought calls last month. Don't know which ones, but chances are you're losing on that one if you bought them last month. Be really, really careful. Paul, I would say if it starts closing below that 20-period moving average, I would sell out of the calls and wait for the next entry point, or maybe even completely reverse the position and go with long-term in-the-money puts to capture some momentum on the downside. All right? So that was almost a non-stop rapid-fire stock analysis. I want to thank everyone, especially our newest members and followers. I appreciate your following there. We had a good record number today, good group of people coming on. If you're a member and you're listening to the recording, then be sure to stay tuned to my weekly market reports as well. We continue to be very accurate on those reports, and I hope you're enjoying it. So with that, I'm going to close it up. Have a good rest of the week, and we'll talk to you soon, folks. So long.
This video segment is a small part of what the market guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.